전투 경보가 울렸습니다.
Oh, come on, man.
Self-destruct sequence activated. 3, 2, 1.
Is this your homework, Larry?
Ask him about the car, man.
Is this yours, Larry? Is this your homework, Larry?
Is that your car out front?
Is this your homework, Larry?
We know it's his fucking homework. Where's the fucking money, you little brat?
Welcome back to the channel, everyone. Johnny here. I hope you're all having a wonderful weekend so far. Let's get right into today's episode. Alright, so over the last 2 months, the price of Bitcoin has ranged within this upward sloping channel and is currently sitting right at $46.2 thousand, just below the upper trend line of said upward sloping channel and the 200 daily moving average. Now, it's been about 2 months since my last video, and in that time, there have been a lot of significant developments that could be both bullish and bearish for the price of Bitcoin and the crypto market as a whole. With the bearish scenario having the potential of Bitcoin heading down to sub 30 and even sub 20k price levels, and the bullish scenario pointing towards a test of the $69,000 all-time high. Now, while I'm not yet convinced that we're going to see higher prices here in the near term, we are starting to see potential signs that $32.95 thousand was this local bottom, hinting towards a possible bullish continuation scenario. Now, the first signs we're keeping an eye out for was a push above our first aggressive buy target here at 41k, and then a push above our second aggressive buy target here at $44.37 thousand. Next, we really want to see a push above our first primary breakout target at $47.336 thousand. In doing so would require price to break out above this overhead resistance as well as the 200 daily moving average. So breaking above the 200 daily moving average really is our first confirmation that we are looking for before we can start to consider the bullish scenario. Second would be a breakout above this $52.027 thousand price level. This is our primary confirmation that we need to see price fulfill before we start to consider the bullish scenario. If price is able to break out above $52,000 and confirm this level as new support, we'll then be looking for price to head up and test this $63.274 thousand level, and a breakout above there will give us the confidence that we are headed higher, likely up towards 100k, specifically right around $101.236 thousand. But regardless of what you hear on crypto Twitter from the simfluencers and armies of bots employed by the space's biggest VC firms and best funded projects, there are some serious warning signs in these charts that we really need to pay attention to. First, let's go ahead and take a look at the DXY. Now, contrary to popular opinion, the dollar is not yet getting weaker relative to other currencies. And as we've discussed many times before, the price of risk assets, which includes Bitcoin, are inversely correlated to the performance of the dollar. And right now, the DXY is looking pretty damn strong, showing some signs of strength here as it consolidates within this potential bull flag that has a measured move up over 102%, with the next major resistance above that all the way up here at 109%, which is also the measured move target of this much larger double bottom pattern that you can see on the weekly and monthly time frames. Now, a strong bullish move here out of the dollar will most likely correlate to a massive sell-off across the stock and crypto markets, increasing dollar demand and driving risk asset prices lower. Now, another reliable inversely correlated price chart is that of the USDT dominance. Let's go ahead and zoom in here to the daily chart. Now, taking a look here at this price chart, we've identified another bullish harmonic that has a 1.272 fib extension of XA all the way up here at 5.73%. Now, if this pattern successfully plays out to completion, that would put the dominance above the overhead resistance of 5.026%, and will likely push higher to complete the measured move of this larger double bottom pattern. It has a measured move all the way up here at 9.91%, likely testing the upper trendline resistance of this massive ascending broadening wedge. Okay, so just to expand on the inverse correlation of this chart, and here's a little graphic that I posted on Twitter the other day. Now, we've also identified a bearish harmonic pattern here on the Bitcoin chart. We can clearly see that this bearish gartlet has formed and that it has a 1.272 fib extension of XA all the way down at 29.09K and a 1618 extension all the way down at 24.8K. Now, if this bearish harmonic pattern is successful, whether or not we see further downside will really depend on if price finds support at the 1272 or the 1.618 fib extension of XA, where the 1618 target of $24,800 we'll see a newer low printed, hinting that price has the potential for further downside to follow. Now, if the pattern is successful and we find support at the 1.272 extension of XA at 29.09K, then that will be a higher swing low from the previous $28,600 we saw all the way back on June of 2021, likely hinting that if price is able to find support at the 1.272 extension above $29,000, hinting that we found a bottom if price catches support here at $29,000. All right, so we've also mentioned many times before that the Bitcoin price and the rest of the crypto market is pretty directly correlated to the price of the S&P 500. Taking a look here at this S&P 500 weekly chart, we can see a bearish hammer reversal candle printed for the week, hinting towards the idea that the nearly 12% rally that began on the 22nd of February could be a dead cat bounce and further downside could be likely.
It will go back up.
So lastly, adding more confluence here to the bearish idea is the fact that the previous 3 times we saw a weekly 20 and 50 SMA death cross, the price of Bitcoin fell more than 60%, with the top to bottom percentages of at least 71 and as high as 86%. Now, if you're exposed to this market, it's important to keep in mind that even though this is Bitcoin, it's still finance. And any space or industry that has anything to do with finance is littered with scams, scammers, half-truths, and flat-out lies. So take what you hear on crypto Twitter and crypto YouTube with a grain of salt, because 99.9% of the quote news you're consuming is just a marketing effort to bring retail liquidity to these markets, because those holding the bags right now need someone to be left holding the bag when they end up selling their bags in profit. If history teaches us anything about crypto, it's that this time is never different, regardless of what anyone says. And if it's happened before, it will likely happen again. But that's it. That's all I got for you guys today. Thank you so much for hanging out with me. Please don't forget to like. Please don't forget to subscribe. If you want to stay up to date on TA for Bitcoin, Ethereum, and a number of other altcoins, subscribe to the free Telegram group. I keep it updated daily, and the link is in the description below. But that's it. Thanks again, guys. I'll see you on the next video. Peace.